Hot Springs Village Inside Out is a closer look at the greatness of Hot Springs Village, Arkansas and the surrounding areas. People, places, experiences. Hot Springs Village is one of the most beautiful places on earth. Join me, Randy Cantrell, and my co-host Dennis Simpson as we engage in weekly conversations to explore Hot Springs Village Inside Out. Today's show is brought to you by Central Arkansas's favorite radio station, KVRE. Find them on the dial at 92.9 FM. Stream them live at kvre.com. Ike Eisenhauer State Farm. Ike and his award-winning team have been serving the insurance needs of folks all around Hot Springs Village since 1998. Ike is qualified for State Farm's President's Club, Chairman's Circle, and Hot Springs Village Insurance Agent of the Year. Call Ike Eisenhauer State Farm today at 501-984-4100. That's 501-984-4100. Find them online at ikeeisenhower.net. Call them today for all your insurance needs because, like a good neighbor, Ike Eisenhauer State Farm is there.
Another episode with one of our favorite people, Mr. Ike Eisenhauer at State Farm. How you doing, Ike?
How you doing, Dennis?
You know, it looks deceptively warm outside. It looks warm.
Well, it is not raining. I'll take the cold if it's dry, and I'll take the wet if it's warm. I just don't like cold and wet.
Yeah, because cold and wet. Who picked that? That just doesn't go together, you know.
No,
not for us.
I think I've decided the ideal environment I would love to live in does not exist, but it would be like an area like Hot Springs Village with hardwood trees where the trees keep their leaves and it's warm all the time. So it's kind of like San Diego, except with the trees we have here, and not not palm trees or things like that keep their leaves like that. So anyway.
Randy and I were talking one day, and he was talking about how, Southern California, they had the weather going on. I'm like, yeah, but they don't have any water going on. You gotta have a combo here somehow, right?
Right. They got a lot of water recently, and and when they get water like that, it gets disastrous. So
yeah, anyway. And it doesn't go where it usually should. Mm-hmm. Speaking of combinations of things, I was listening to the radio the other day. My good friend Scotty Mack, who you advertise on his Scotty and Polly show, KVRE 92.9, Tuesday, Thursdays, and Fridays at 1:00.
Right.
One of the few places where you can actually request and get a song played these days. It's that's a throwback, right?
Yeah, it's been ages since since radio stations been able to do that. They're all corporate driven.
Well, it's all automated these days. There's nobody sitting there. It's just a machine running audio. Anyway, I say all that.
They get to choose what they play. So
and I love them. I literally love them. That said, Scotty was playing an article and ad the other day, and I was thinking State Farm Insurance. Your home, auto, life, and financial advising. Really? I mean, I didn't. But it makes sense. I just hadn't glued it all together. Tell us some of the associations you have or how you can help other people.
Oh, yeah. Well, in addition to auto and fire insurance, we've always had the ability to do life insurance. Mm-hmm. And, life insurance is a big part of your financial portfolio for a lot of folks. There's a lot of uses for life insurance people are not aware of. And, I moved here, literally moved to Hot Springs Village 25 years ago tomorrow.
Are you serious? So, tomorrow?
Yeah. And so I'm coming up on the 25th anniversary of starting an agency. I had worked for State Farm Corporate for 8 years before that. Wow. And but back then, and we had auto, fire, life, and health. And within a year or so, we came up with State Farm mutual funds. And so I became a registered rep and started selling mutual funds through State Farm, and then long-term care insurance and State Farm Bank and all these other things. And, within a few years, we were among the company leaders in financial services. And so I've been doing more financial services over the last 20 years than I have done auto and fire. My team members do all that, but I spend my time working on the financial services part. as much as I can. So anyway,
Ike, let me interject just for a moment, and I want people to hear me, and I want to hear my version real quick. You and I sat down probably 2 weeks ago, 3 weeks ago, and discussed life insurance. We had this discussion I said we'd been trying to have for a while.
right.
At no point did you say, well, Dennis, this is the plan for you, and this is what you need, and here's how you. We just had a conversation like friends. If you think, if you listener and watcher, if you think they're just going to get me in there, they're going to buttonhole me and they're going to push me, this is not a timeshare sales presentation. This is talking with your friend. This is talking with Ike, who goes, maybe that's not best for you. I don't know.
I've got a saying around here is like everything here is going to pass the mom test. Would you want your mom to do it? And so there's a lot of great products out there. Let's talk, for example, annuities. There's a lot of people have very strong opinions about annuities. Some people love them, some people hate them. Some people, I'll never touch an annuity and all that kind of thing. And, they're not a one size fit all type product. And there's so many variations to it. Like something might be perfect for you and something might be terrible for you. And you don't get to diagnose the solution to a problem without talking to people and getting to know what their personal circumstances are. And so anyway, we've got enough that we've got something for just about anybody. And I in the financial services industry, there's a lot of emphasis on suitability and best interest and things like that keep us from abusing financial advice to people and to try to make money or anything. First of all, I make most of my money from auto and fire, so I don't have to squeeze every nickel out of you that I can. And second of all, I do it because I like helping people. And I want to find something that's appropriate for you. And for some people, it might be as simple as a CD. And for other people, it might be much more complicated than that. And so anyway, we ask a lot of questions and try to find the solution to your problem.
Well, I think corporate America today wants, okay, Ike, do you need A, B, or C? Just pick any of these. Well, I need a little B and a little C. No. That's not an option. And I felt like when we were talking, and there's no question, it's D, E, all, F, all, G, all the above, Z, Q, L, whatever I need, whatever really fits my unique situation, which, as we talked about, everyone thinks their situation is unique. Many people are unique, and they do have unique needs that don't fit A, B, or C, right?
Right. Absolutely. And, for some people, the solutions can be kind of complicated, but we try to simplify them as much as we can. Sometimes the right answer is a complex product. Maybe it is a variable annuity with some guarantees built into it. And, but there's a reason you do that. For other people, it's a life insurance product, and people might be, well, I'm 72 years old. I don't need a life insurance policy. And it's like, you know what? It might be a great use for a life insurance policy. The year before last, we had 2 second to die life insurance claims that were paid within months of each other. One of them came from CD money. People had $100,000 in a CD, and they were never going to spend it in their lifetimes. It was just going to go to their kids. Like, well, what's the best way to leave money to your kids? Life insurance. And so we took that and we turned it into a second to die life insurance policy, and $250,000 death benefit, which went to their kids. And when we paid that check out, they got it without any income tax consequences whatsoever. And it would have taken years and years and years to take $100,000 and turn it into $250,000 after tax, and we were able to do it for them. Another case,
back way up high. I'm loving this story, but I need more breakdown. So let me back up. So, when you say an annuity, I immediately think of a CD. Am I in the ballpark?
This was actually life insurance. Yeah. This was taking money out of a CD. They had a CD that was coming due. and they were
And
going to put it
that's
into
pretty
another
common
CD.
here in the village. I mean, there's a lot of CD holders in the village.
Oh,
A
yes,
lot.
they're
I'm
everywhere.
I'm asking, but I think I know the answer.
Yeah, yeah. I mean, CD. This is CD heaven over here. And as a matter of fact, so to back up the story a little bit and explain that part of it, we have we for years we had State Farm Bank, and we grew State Farm Bank organically. In other words, we did not buy another bank or take any assets over. Every account on there was put on the books by a State Farm agent somewhere. And so anyway, in Hot Springs Village, we're in a place where people just really love CDs. And so we would put hundreds of CDs on the books, and they'd come up for renewal, and we talk to people about, what the new CD rates are, and people always tend to shop those things around because, everybody's trying to get a little bit better rate on them or whatever. And so anyway, so we've done CDs for years, and then State Farm Bank sold out to U.S. Bank, and so so they just decided it wasn't making us enough money, and so they replaced what we did, the majority of our stuff with State Farm Bank. They replaced it through 3 different things. We did our mortgages. We do mortgages now instead of through State Farm Bank. We do them through Rocket Pro. So I'm mortgage licensed, and so we do mortgages through Quicken Rocket Mortgages. And because I'm a Rocket Pro mortgage loan originator, we get better rates than if you went online and did loans through Rocket. And so anyway, and that's just something that was available to us. We used to do a ton of car loans. Arkansas, for some reason, the state of Arkansas and State Farm just every year just blew away the rest of the company in car loans. It was just part of our culture here. And so we would do dozens of car loans every year, usually refinances. People buy a car and hey, what kind of rate did you get? It's like, oh, they gave us, let's say 4% or 6% or something. Well, we can do it for 4. And so we would just refinance the car loan. We do that now through Lightstream. So you might have heard Lightstream advertised. Yeah. So yeah, we're all authorized in here to do Lightstream loans, and those are more than car loans. You can do boats, recreational vehicles. You can do aircraft. You can do home repairs. You can do all sorts of different things through Lightstream. And so we took that part of State Farm Bank, and now we're doing that through Lightstream. This was only within the last month and a half that came. And then the third thing is the CDs and everything. So now we've got our CD specials back through U.S. Bank, and they give us better rates for doing it through me than if you went to the U.S. Bank branch that's like right around the corner from here. And so anyway, we get special rates there. So anyway,
unbelievable. I mean, I had no idea. I thought I had a.
It's kind of like how Walmart, how Walmart gets better deals from their vendors. Sure. And everything. Well, sure. When we went to business with these companies, we get better deals. I just did a $500,000 mortgage a couple weeks ago, and anything above $300,000, we give a break of 1.375 points on their closing costs. Well, I mean, you do the math on a $500,000 mortgage. I mean, that's what, $6,000-7,000 or something that we saved just in closing costs. And
unbelievable.
So, yeah. Well, the funny thing is, they already had a mortgage going on, but what's the most expensive purchase you ever make?
Your house.
A home. Yeah. It's like, why don't people shop mortgages more? And I think we saved them a point on their interest rate too, and we gave them a 1% break on the first year payments too. So anyway, just some cool stuff we're able to do to help people.
Well, what I'm learning here and going through the pieces is I go to the bank and I can get a CD rate and I can get a mortgage that they don't really service most times, and then right. I can get these other services. But then when I buy insurance, it's astronomical. If you buy insurance from a bank, it's biblically expensive. It's like they don't want you to buy it. My point right. being, this is somebody local you can go sit down across the table from and go, hey, Ike, what fits me here? And because we went quick and I understood what you want. I think I understood where you were going with this. But so you had clients that had $100,000 CD. Mm-hmm. didn't have any real use for it, not going to
Nope.
use it between now and the
Never
time
going to
they
spend in their
pass.
lifetime. Yeah.
I'm sorry?
And they were never going to spend in their lifetime. You're right.
And so they turned that into an insurance policy because they're not going to have to pay a tax on it.
Right. Yeah, it's a second to die policy. So the way that works is first person dies, nothing happens. Second person dies, the death benefit pays out.
So let's back up even higher, because I know, I think I'm a pretty decent businessman, and I've learned a lot from you very recently. So what's a first to die policy and what's a second to die policy? What's the purpose of a first to die? What's the purpose of a second to die policy?
Oh, excellent question. So a first to die policy pays on the death of the first person. So let's say you've got a couple and one of them passes away and they're going to lose some income or something like that. Or it could be business partners, sometimes it's something like that, to buy the remaining part of a business or something.
So you don't have to be married to have a first to die, or?
No, you could be business partners or something
really?
Like that too. Yep. So anyway, so let's use the married couple thing. So let's say you're going to lose one of the Social Security payments, and you might lose a pension or something like that. In a situation like that, you can do a first to die policy, and you don't know who's going to die first, but when the first person dies, the second person is left better off. And you're only buying one death benefit. So it's cheaper than buying two policies. So that's how that works.
How many people do that? Because I'm stuck right there for a minute. What a great idea. And you might buy one policy, it's cheaper. Whichever beneficiary needs it. It's not, okay, Dennis, this is your life insurance, or Diane, it's whoever passes first. It's the other ones, right?
Exactly. Yeah. You're buying one death benefit rather than two. And then when the first person dies, the second person has an option of keeping the insurance. They can convert it into another policy or something like that.
So they could convert it into a second to die policy.
If they care about doing it.
Yeah.
Yeah. So they may not need it at that point, but it's the possibilities there. So
let's back to the example you were given, if you don't mind. The $100,000 CD, which okay. Look, I get the CD thing, and I've been here 20 years, and I see the CD. This is a CD mecca. I got it. Villagers are, number one, prudent and very careful with their money. Number two, they like CDs. Number three, they like to pay things off. They like to have their house paid off. They like to have their car paid off. And I agree with every one of those. I think those are great fiscal moves. That said, with inflation at 6 and 7 and maybe higher percent, is a CD still a good idea?
There are people who are afraid to lose anything, and the only, one thing you can say about a CD is you're not going to lose money. Problem is you're going to lose money to inflation, and so if that's your only option out there, for a lot of people, they're set for life. They could lose money to inflation and still be okay. But for other people like that, these inflationary times are really hurting them, and they really should have an option to get something where you might have a chance to beat inflation with part of your money.
Yeah.
So.
Yeah. Well, once again,
you can't really tell that until you have the conversation with people too, because for some people it's like, I don't need it at all. For some people it's like, that's a lifesaver.
So there's too many variables to just make a general statement, but where I'm going with that is that you took $100,000 CD, which maybe that's a discussion you need to have too. Mr. Ike is 501-984-4100. Is that correct, Ike?
That is correct.
Place to call. But the second issue is you take that and convert it into a life insurance policy that you're going to live to a child or a grandchild or whomever, and it's not taxable, right?
Right. Death benefit on life insurance is never taxable, and you don't pay tax on the growth of it either. The growth within the policy, if it's set up properly, you won't have any kind of taxation as it grows.
So you grew up.
You're going to get 1099 on a lot of different kinds of investments. As they grow.
So you're taking 100,000, you're converting it into 250,000 death benefit, and there's no tax paid on it. For most people, they're going to be in the 27% bracket or something like that, right?
Like, yeah, well, maybe not quite that high for most people with
but
the
25 to 22, something like that.
yeah, let's say 20.
So that 100,000 would have only netted 88,000 or so, right?
Yeah, yeah, let's say something like that. Yeah,
but
sure.
instead it yields 250 with no tax at all, which would have saved 24,000 and well,
right,
30,000 probably.
Mm-hmm.
It's kind of a no-brainer, isn't it? If you know about these options, right?
For a lot of folks, yeah. For a lot of folks, if you can get them qualified medically, and second eye policy is a little easier to get qualified because you're more concerned about the health of the second person than you are the first, you know.
So because you don't know who the
so
second person's going to be.
yeah, one person could be not as healthy as the other. Let's say you've got a husband who's 3 or 4 years older and in poor health, or maybe not necessarily poor health because you still have to qualify, but more health concerns, and the wife is going to live longer statistically, and you might have a situation like that. Well, he may not necessarily qualify for life insurance, but for a second eye policy, we're not necessarily as concerned about him as we are the wife. But in both of these second eye policies I was talking about, is the husband who outlived the wife, and
Really?
yeah, and one of them, the husband had health problems, lived to be in his 80s. That we paid a $2 million benefit on that.
Wow.
That was that premium was $25,000 a year plus. They paid it for, I think, 17 years. So they only paid like $400,000 into the policy, and it paid a $2 million death benefit.
My goodness. Oh, you
Yeah.
said 25,000 a year. I'm like, I thought you were going to say a month. Oh my God.
No.
I'm like 25,000 a year, couple $1,000s a month, not cheap, but still, wow. Well, I'm sure you know the realtor Pat Bollier. You know Pat, right?
Yeah, she used to live in my hometown.
Oh, really?
Yeah.
I had no idea.
Mm-hmm. Yeah, I remember when she first called in, she's like, I said, where are you moving from? And she says, oh, Boston, around Boston. It's like, where around Boston? Oh, about 30 miles away from Boston. It's like, what town? Marlboro. It's like, what part of town? What street? It's like, what? It's like, that was my hometown. Yeah, I used to live like 2 miles from where she lived.
Wow. Well, the reason I bring up Pat is because she has a hysterical quote. I think it's funny. A lot of maybe other people may not, but she says when everybody says, well, this is our final home, we're never leaving here. She says, no, one of you is leaving here before the other one. We just don't know who it is right now.
True.
Well, I tell you what, thanks for a great show. And I'm actually still trying to process all this. I think the best thing to do is call 501-984-4100. Ask for an appointment. Most times you can set up an appointment and just chat with you. The number of options just seem nearly endless, don't they?
There's all sorts of different things that we do. But the only things we don't do individual stocks. We don't do individual bonds, things like that. We've got mutual funds through BlackRock, who manages more money than anybody else on the planet. We've got mutual funds through American Funds, who's one of the largest and most successful mutual fund companies in America. We've got annuities through Jackson National. We got annuities through State Farm. We've got CDs. I mean, we get anything from a simple CD to a fixed annuity to the most complicated annuities to life insurance options. We've got access to just about anything. So
I think one thing that and people my age and people maybe younger than me, I think one of the things that people need to bear in mind is that there's always risk, but there can always be reward too. I don't think of State Farm as a fly-by-night FTX Bitcoin kind of company. I think of State Farm as somebody that I can't remember the last time State Farm made a really bad investment. I don't ever remember that. From a child, I don't.
Right. Yeah. We've been successful for years and years. Number one insurer of cars since 1942. Number one insurer of homes since 1964. We're very conservative. They refer to themselves in corporate as Conservative Midwest Company because they headquartered out of Bloomington, Illinois, they're very very conservative company, and we don't do business with anybody who's not a top-notch company. So yeah, I mean they're very and we're insurance people. You know, I've been doing insurance now for 33 years, you know, 25 years as an agent. And, you know, it's about risk management. I mean, when you're an insurance guy, it's all about risk management. But, you know, sometimes risk management is stepping away from just doing simple CDs and doing something maybe a little bit more bold where you can get a little bit more return, because inflation's a risk too, right? Longevity is a risk. You can outlive your money. That's a risk too. So anyway, there are things that we can do to help manage your risk in all sorts of different ways.
Well, I think one thing we need to bring out when we're talking about CDs and so forth is just because the number, you have a $100,000 CD. Well, I grew at $3,000 last year with 3% or whatever. Just because that number doesn't drop to 97 or whatever doesn't mean those dollars are still worth what they were. You've stored them in the bank that whole time, or you've stored them in the government loan that whole time. So give me an example, just for my curiosity. What would be another annuity type investment that would pay a little bit better than a CD, but still have near CD stability?
Well, I got to tread lightly here because I can't really talk too much about securities products.
Sure.
So I'm going to be as general as I can.
Okay.
We have one particular type of annuity where, let's say you have $100,000, you put it in there. 6 years later, market goes up to, let's say it goes up, let's say it doubles, goes up 100% in 6 years. You get that market return. Guess what the fees are on that?
I can't even fathom.
None.
Zero.
Okay. What happens if your money loses? I mean, let's say you lose, let's say $100,000 turns into $82,000 after 6 years.
Right.
You can guess how much you've lost? Nothing. Because the annuity provides that guarantee. We can take the first 20% of your loss. We can guarantee you the market gain, and there's zero fees involved whatsoever. And it's not much more complicated.
Yeah, I want you to give me that last two sentences because it broke up just a little. I thought you said you can guarantee, and then you say that one more time.
Okay, we will take the first 20% hit on your losses. Okay, so we will guarantee that you won't lose money for the first 20%. Okay, if you lose more than 20% over 6 years, first of all, it's pretty historic because I don't know if it's ever happened, to be honest with you, but anyway,
but it could.
It could. Yes, it could. But you know, it's you know, with us taking that $100,000 example, let's say it goes down to 75,000. You've only lost 5,000 because we eat the first 20, right?
And in that 6 year window, it goes back and improves another 40%. Then I get that 40% gain.
Yeah. I mean, so basically, they take a snapshot of the $100,000 at the very beginning and a snapshot at 6 years later, and whatever the market shows you 6 years later, that's what you get. And there's no fees.
Is there a finite-tivity? Is there something finite about the 6 years? Could you roll it over again? What could you do?
Yeah, you could keep it in there. You could do it again. You could change. You know, we do the same thing with the 1 year guarantee. You know, the 6 year tends to be more favorable in the long run, but you can't do it on a 1 year. You're more likely to have a 20% loss in a 1 year period. You know, you know, I mean, every year in the market, you know, there's a drop in the market every year. You know what the average drop is on a given year? 15%.
Really?
15%. Yeah. Even in good years, the market drops 15% at one point or another. So,
and here's where I'm processing that through in my head. I'm thinking, you know, this is the solution, a solution based on what the variables are. But, you know, we've seen a market that has been at record highs and now has significantly dropped.
Right.
If you're thinking about getting back in the market, but you want to reduce your risk, this would be the way, right?
That's a fantastic way to do it. Yeah.
Wow.
We're getting more interest in this than anything else we're doing right now.
Yeah, you think?
Yeah. It sounds too good to be true, but it's not.
Well, especially when it comes from State Farm, a company you've known and trusted for 100 years, right?
Well, it's through State Farm, but the company is actually Jackson National Life Insurance, another one of those alliances we have. And so anyway, they're the number one in their industry for doing that kind of a thing. Yes.
I've never spoken with you and not been enlightened. I promise. It's always a delight. I tell you what, we'll see you next time. Ike, thanks for joining us. Talk to you soon.
Absolutely, Dennis. Take care.
Thanks, buddy.
Thanks for watching and listening to Hot Springs Village Inside Out, a weekly podcast starring Hot Springs Village, Arkansas. Visit the website at hotspringsvillageinsideout.com.